Yo, what is going on, guys? Welcome back to the Murdoch DeFi YouTube channel. And in today's video, you can see it up on your screen right now. We're going to be talking about a project that I've recently got into myself personally that checks a lot of the boxes for me when I'm looking at DeFi projects to invest in. It is called Delta Ventures. And as you can see, it says a smarter way to invest in digital assets. And essentially, what these guys are doing, right? If we remember, I don't know, months and months and months ago, where these projects were popping up where they had either bots trading for them or they had actual traders, but nobody could provide trade logs or anything like that. Um, this is essentially a protocol that's doing that same thing. However, they are very transparent with actual trades being made. They post videos like on a weekly basis, or not weekly, but on a monthly basis, going through like all of their trades that they've taken for that month. They've, go over even losses that they've taken, wins, and then they give you like the actual account balance in the actual Bybit account. So that you can kind of verify all that stuff. They also go through and give these types of things where they talk about actual trades, how much profit was made, what that profit percentage is, and they continually do those. So look at this is June 29th through July 15th. So it looks like they do those twice a month. And then this is June 15th through June 29th. So this is like the most recent stuff. But all in all, very cool. So I wanted to briefly talk about what Delta Ventures has to offer and kind of like what they're doing. And like, of course, just like any other project, or protocol, there's certain parameters with how you interact with the protocol itself. They are KYC'd by Nanodox over on Twitter. I'm not too certain the quality of that KYC company, but they have taken those steps. But if you go into the DApp here, you can see that the average daily return is 1.48%. And again, they have the actual trade logs to back up this stuff and gives you the profit percentage rates. They have some crazy trades here, 49%, $58,000 profit on that trade, $34,000 profit on that trade. So averaging out over the course of the month, this is what they are producing. So 1.48% average daily return. They have a couple of different pools that you can come in here and invest in. I just put $500 into the USDT pool. They have a BNB pool, and then they have some older ones that I don't believe you can invest in. But that being said, you're still getting that 1.48% daily return. Now it is a variable return rate, so whatever they're producing for that day is how you're paid out. But you can see the average monthly return 45.2 or 45.92, so almost 46% monthly. They have a total investment of $551,000 into the protocol actively. So they've been going on for some time now. They're looking to cap it at $2 million, which is always good to see a cap there, right? But let's go ahead and jump in a little bit into their white paper and just kind of chat about it, right? So just kind of gave you the brief overview, right? Following the platform transition to version 2, new deposits are no longer accepted into the previous fixed return pools. So they did have in the beginning some fixed return pools, which obviously those are harder to manage, right? If you don't have a set, if there's no way to guarantee a specific amount of return per day, and we've seen that with, projects like PGV, and I don't know, who knows if they were actually even, if Manny was actually even trading or if it was just a huge Ponzi. But even they faced those kinds of issues with fixed return pools, and then they tried to like adjust it to these variable return pools. So let's jump into this variable return pools and talk a little bit about that. So variable return pools are currently the only option available for investors. They have two variable return pools, one for USDT and one for BNB. The returns are generated through automated future trading bots and are announced on a daily basis for both. Now, one thing that I've noticed just using my own bots, whether it's Forex, whether it's crypto or anything like that, there's still a huge risk to the downside. When using these bots, especially trading with large amounts of money, we have protocols like iBots that just recently went under because they didn't account for risk, and they lost like 80% on a single trade, right? So it's very interesting. I think I'm going to have the creator of this project on for an AMA, so I can get some better insight onto how they actually man these trading bots, what their risk tolerances are, what the potential risk to the downside is, if they're over leveraged, if they're using leverage trading, or all that stuff, right? Which, assumingly, if they're making 50 grand on a single trade, then it's likely that they're using some insane amount of leverage. So that's always something to keep in mind when you're thinking about the risk or the potential to the downside, right? Using leverage is extremely risky if you don't know what you're doing. So claiming rewards are available bi-weekly, so every 14 days or every 2 weeks. Fees in keeping our fee structure transparent and aligned with our investment objective. The new pools will have a 2% deposit fee and a 20% performance fee. So just kind of keep that in mind when you are seeing if this might be potentially something that is a win for you to look at, right? Deposits, we offer flexibility for investors, meaning we don't put locks on deposits. So withdrawals, you have the freedom and flexibility to initiate withdrawals at your convenience anytime. While the platform facilitates instant withdrawals, it is essential to acknowledge that under certain circumstances, such as pending trades or open positions held for an extended duration, a delay of up to 7 days may occur, right? So if they are taking the money that people put into this smart contract, they're withdrawing it from the smart contract, putting it into the Bybit account, obviously there has to be some lag time, especially if they have funds tied up in specific trades and things like that. So that's a good thing to take note, but it's also cool to see that you have the freedom and flexibility to initiate a withdrawal whenever at your convenience. So fixed return pools, again, these are not something that are available anymore. So these old pool 1 and old pool 2, those are not something that you can currently invest in. So it looks like the majority of the investors are in here with USDT. Like I said, they do have that KYC. They are audited by CryptoPrim and the Stamp. Again, it could be debatable on whether or not those are good auditing companies, but they have gone the extra step of getting not 1 but 2 audits on their smart contracts. They give you all the contract addresses here, and then they do have this insurance fund, right? So this is always good to see as well. As a user-centric DeFi platform, we don't merely manage your investments, but we care for your financial security. We've created a robust and transparent insurance fund to shield you from unforeseen market downturns, giving you the peace of mind you need when navigating the world of crypto investments. It says, at our heart and community-focused platform lies the insurance fund, a dedicated financial buffer designed to absorb unexpected shocks. In the event of any drawdowns, this fund is built on the principle of guaranteeing your return on investment and optimizing your safety. A percentage of the daily trading activities is distributed to our regular depositors, and the remaining is primarily assigned for referral bonuses. However, not every new member joins through a referral. The leftover percentage from this contribution is contributed to the fortifying of their insurance fund. This allocation system ensures the continuous growth of the insurance fund, enhancing our platform's resilience while providing an additional layer of security. Moreover, the insurance fund is projected to experience continuous growth, eventually surpassing the total sum of investments deposited. So this is kind of interesting because they do have a referral system in place, but the beauty of it is that, like it says, that like not everybody is going to rejoin the protocol through a direct referral, and those people that don't, instead of that 2% reward going to the referral, it goes to the insurance fund. So that's how they're able to grow and build their insurance fund. Is there any way we can see what the actual insurance fund is. I'm not sure, but it does tell you what the daily return rate has been. So this is what it looks like over the course of, let's just say, the last 24 days. So always above 1%, even getting as close to 2% as possible, 1.83. Today's return has also been 1.33%, so that's pretty cool as well. So yeah, they do have a referral system in place. I'll leave my link down below in the description if you want to check out this protocol. But I will keep you guys updated on how this performs for me. You can let me be your guinea pig. But as always, guys, DeFi is inherently risky. These projects are inherently risky. I try to do my best to outline the risks associated with any kind of investment strategy, whether it's crypto or otherwise. But that being said, guys, thank you so much for tuning into today's video. And of course, we will catch you on the next one.